Hi guys, welcome back to another episode of the Web3 Quick Bite podcast, the show where we jump to the latest beats in the decentralized world and chat with some brilliant minds. I'm your host, Olabisi, and today we are exploring a topic that's crucial for anyone venturing into the world of cryptocurrency: stablecoins. So, just to give you a visual example of what stablecoins are, imagine you are on a ship in the middle of a storm. The waves are Bitcoin and Ethereum rising and falling dramatically. Now, picture an anchor that keeps your ship steady. That's what stablecoins are in the crypto world, a stabilizing force in a sea of volatility. Today on this episode, I will demystify stablecoins and explain why they are becoming increasingly important in the current crypto market. So whether you are a curious beginner or a seasoned investor, this episode will shed light on these unique digital assets. So what do you say? Let's dive in. So let's start with the basics. What exactly is a stablecoin? In simple terms, a stablecoin is a type of cryptocurrency that's designed to maintain a stable value, unlike Bitcoin or Ethereum, which can see their prices change dramatically in a single day. Stablecoins aim to keep their price, stable. Most stablecoins are pegged to a stable asset, typically the US dollar. This means 1 unit of the stable coin is meant to always be worth $1. It's like having a digital version of a dollar bill. There are 3 main types of stable coins. Fiat backed. These are the most straightforward. For every digital coin issued, there's a real dollar or other currency held in reserve. Think of it like the old gold standard, but for crypto. The second type of stablecoins are crypto backed. These use other cryptocurrencies as collateral. It's a bit like using your house to secure a loan, except here you are using crypto to back a stablecoin. The third type is algorithmic. These use complex computer programs to maintain their price stability. It's like having a digital central bank that can create or destroy coins to keep the price steady. So each type of these stable coins has its pros and cons, but they all serve the same purpose: to provide stability in the crypto market. So think of your USDT, your USDC, they all fall under stable coins. So the next question now that you're probably asking yourself when you're wondering is, okay, since we already have the currency, why do we need stable coins? Please, why do we even need digital version of this currency? And why do we need stable coins? Can't we just use regular cryptocurrencies? So to answer your question, but most importantly, to understand this, let's imagine you run a coffee shop and you decide to accept Bitcoin as payment. That sounds cool. It sounds futuristic, right? But there's a catch. Stay with me. On Monday, a customer buys a $5 coffee with Bitcoin. Great. But by Tuesday, that same amount of Bitcoin might only be worth $4. Or it could have shot up to $6. So this volatility makes it risky for you as a business owner. Think about it. But that is where stablecoins come in. They offer the best of both worlds: the stability of a traditional currency and the speed and efficiency of cryptocurrency. Doesn't that sound exciting? Having the best of both worlds at the same time. But now, stablecoins are useful in several ways. Trading. Traders use stablecoins as a safe haven. When the market gets rough, they can quickly move their assets into stablecoins without having to convert back to fiat currency. So you made your profit from your meme coins, from your altcoins, from Bitcoin or Ethereum or any other coins. And because of the volatility that comes with these coins, if you keep them there, your 100k might turn to $1 in the twinkle of an eye. So traders, beginners, intermediaries, advanced, they quickly convert this other coins to stable coins, USDT, USDC, and other stable coins, because it helps keep their money safe. It helps keep their investment safe, and the market volatility doesn't affect it. So you get, so instead of keeping your profits made from other coins, your other transactions, keeping it where the market volatility affects it, converting it to stable coins helps keep your money safe and reduces the risk by 99.9% of the market, by the market volatility, right? And second is, stablecoins is useful for everyday transactions. Stablecoins makes it practical to use crypto for regular purchases, like buying that $5 coffee. So if you're using your USDT to buy a $5 coffee, your $5 is $5. Tomorrow it still remains $5. Next tomorrow it still remains $5. There's no going up, reducing to $4 tomorrow, or going as high as $10 the next day, right? Another useful way that you can use your stable coins for are sending money internationally. So stable coins offer a faster, cheaper way to send money across borders compared to traditional banking systems. Anyone who is in the crypto space, the Web3 blockchain space, knows that doing transactions in this space is fast. It takes less than 30 seconds for it to get through. So it's so fast. You just send your wallet address, I send it from my wallet, and you get your money in less than a minute. So rather than having to open your bank app, put your account number, sometimes network delays, sometimes the banking system has issues and whatnot. The fourth one is earning interest. Many crypto platforms offer high interest rates for holding stablecoins, often much higher than traditional savings accounts. So in our current market, where uncertainty is high, the demand for this stability has increased significantly. And so now that we've already spoken about that, the next thing for us to do is to look at how stablecoins are actually being used in the real world. I know I've spoken about several ways that stablecoins are useful. I've explained what stablecoins are. Now we need to come back to reality. We need to touch the grass and come back to reality and talk about how it is being used in the real world. So I'll give another visual example. Imagine you're a freelance graphic designer living in Nigeria, but most of your clients are in the United States. Most of your clients are in Europe or out of Nigeria. You could ask clients to pay you in naira, but with the high inflation rate, the value of your earnings could decrease rapidly. You could ask for payments in dollars, but international transfers can be slow and expensive. It can be slow and expensive. You need to have an international account. You need to have a domiciliary account. You need to have this. You need to have that. Sometimes your clients get frustrated and they're like, you know what? I don't want to do this. So that's where stablecoins come in their superhero cape to come save the day. So your clients can pay you in a USD pegged stablecoin like USDC. Remember that I mentioned this earlier. The transfer is quick, cheap, and you receive a digital asset that's stable against the dollar. You can then hold onto this stablecoin, trade it for other cryptocurrencies, or cash it out to naira as needed. How cool is that? And like I said before, it takes less than a minute. You just send your wallet address to your client. They send it from their wallet, and you get your money in less than 1 minute in USD value. So this is just one example. Stablecoins are also be used in remittances. We have migrant workers, people who live outside the country, sending money back home. For e-commerce, online stores, we now have online stores accepting crypto payments. I think the most popular one, DeFi, probably heard of DeFi one way or the other. That's decentralized finance for lending, borrowing, and earning interest. And But I think this is the most popular one. Crypto trading can be used as a stable pair for trading other cryptocurrencies. So the use cases are expanding as more people recognize the benefits of the stable digital assets. Now that we've already talked about how people are using it in the real world, and I've given you guys a visual depiction of how people are using this in the real world, now let's look into the future. Because as we look to the future, it's clear that stablecoins will play an increasingly important role in the crypto ecosystem. However, it is not all smooth sailing. Regulators around the world are paying close attention to stablecoins because they are concerned about their potential impact on financial systems and want to ensure they are properly managed and backed. There are also ongoing debates about centralization. Many popular stablecoins are issued by companies, which goes against the decentralization ethos of crypto. This has led to the development of more decentralized stablecoin models. So, despite these challenges, the future looks bright for stablecoins because they are bridging the gap between the traditional financial world and the new frontier of cryptocurrencies. Right, so the future of stablecoins, and since we're in the present, we can only assume about what the future is going to hold for stablecoins. But in the meantime, I would say let's just enjoy the stability and the peace yeah that stablecoins offers us. But I believe that in the future it's going to be much more advanced, and it is going to be way better than what we are experiencing right now. Who knows, there might even be 1,001 use cases for stablecoins in the future. So to wrap up, let's recap why stablecoins matter in our current crypto market. 1, they provide much needed stability in the volatile world of crypto, which I think is the most important thing. 2, they make everyday transactions with crypto practical. 3, they are useful for trading, sending money internationally, and participating in DeFi. And 4, they are growing in popularity as more people recognize their benefits. So, whether you are a crypto enthusiast or just crypto curious, understanding stablecoins is becoming increasingly important. They are not just a niche product anymore, but a fundamental part of our crypto functions in the real world. So, there you have it, guys. That is all we have on today's topic of stablecoins, the future of stablecoins, and how you can use stablecoins to run your transactions either as a trader or just as a general user. And so, guys, thank you for tuning into this episode of the Web3 Quick Buy podcast. And if you found today's episode helpful, please don't forget to subscribe, like, and drop a comment. And if you have any feedback or questions, kindly send a mail to web3quickbytes@gmail.com. Until then, guys, stay curious and keep exploring the exciting world of crypto. See you in the next episode. Bye.